welcome to this short episode of the discussion on how to properly identify and trade change of character in any financial market. So basically, this is the US dollar against the gold commodity. So we're looking at gold USD. And first of all, if you're a new subscriber here, thank you very much for subscribing. And for those that are returning, please, you are welcome once again. And if you haven't subscribed, please do well and do that. And hit the like button so the algorithm can recommend this particular video to other audience. Please do stay and watch to the end. So let's dive right into it. So here we are looking at the first thing to look at is the time frame. You have to get a time frame, okay? So it is a 15-minute time frame that you are using. Then basically you have to identify your structural highs and lows. Okay, so if you look at the photograph over here that I captured just last week, uh, probably the first week in December, you realize there was a change of character here at this level where the mouse cursor is, and then we rode above this previous high. Price went from above here, descended into this area. There was a break of structure here, a broke structure here, but when we came to the top here, we realized that there was a change of character. So there are specific things that you should look out for before you pull a trigger. Okay, if I say you pull a trigger before you enter a trade, that is what I mean. So first off, you have to look at your change of character. If that is confirmed, you can confirm that by uh, candlestick closing above the previous lower high. Okay, so this was the previous lower, just the previous or just the recent lower high. So after the candlestick is able to close above the previous lower high, then you wait for a correction against the trend. Okay, so the trend moved up and broke and changed character. Okay, the character is lower low, lower high. Now the character has changed towards a new high forming above the previous um, lower high. I hope I'm correct. Yes. So after there is a close of a candle above the previous lower high, so it means that a downtrend is changing towards an uptrend. That is the meaning. So the moment you see a change of character, which means that a bullish candle has closed above the previous lower high level, then it means that the character of the market has changed from bearish to bullish. Now, it doesn't mean you should go into a trade right away. What you should do is that you should wait for what price to retrace back into what demand. And you can identify demand by first identifying the inducement level, which is here. When I say inducement, I mean price will definitely react to that level, and you might think that that is the beginning of the move, but that isn't it. So you have to wait for price to drop further through the fair value gap. Fair value gap is this very strong bullish candle and a continuation upside. So there is a gap between this candle and the last bearish candle. There's a gap between this continuation candle and the last bearish candle at the bottom here. So you must have your inducement after your inducement level. So the inducement in this case is around the 0.5 or the 50% retracement level. Okay, that is no trade for you. You have to wait for price to dip right into the demand zone by crossing the fair value gap level into demand. That is the last bearish candle below the fair value gap. Now, the move from this area to the down here, I refer to as the ejaculation a trigger, which means that it comes very strong into the zone. Okay, so after it goes strong into the zone, then scale down to other possible lower time frames, and you pull your trigger with a stop loss what below the previous lower low. Okay, if price goes below this, then means that your trade is invalid. Simply go out of the market and wait for other opportunities. Okay, there is no way price should travel below this previous lower low and still hold in anticipation that there is going to be some miracle. The moment price goes below this last low, then it means that your trade becomes invalid. Okay, so you only pull a trigger when you are in the region of the last bearish candle. Okay, great. So let's see the result, let's see the outcome. In this case, price bounced off the 78.6% Fibonacci. Okay, so all these things are coming into play. Okay, it is a very deep retracement level, and there's a confluence here, which means that price was able to react to the 78.6%, and at the same time around the demand zone, and at the same time uh, a very deep retracement. So let's check out the result. So as you can see, price bounced off the 78.6% and broke structure. Okay, came back a little into the zone and broke structure again. Now, looking at this break of structure, this is a trend continuation. The reason I'm saying this is a trend continuation is that this strong bullish candle has closed above this previous high. Okay, so since this is a break of structure, you have to wait for price to come back into the origin that caused the break of structure, and this is the last bearish candle below here. So you can see there's going to be another deep retracement. So always buy the deep retracements, okay, with understanding that you are looking at your demand zone or your supply zone. Okay, so in a bullish market, you are looking at what? The demand zone with a deep retracement. So let's go forward and look at the next move. For we realize that price took a trend back into what? The zone that I'm identifying as what? Demand. Then from there, let's see what happens. Price began making moves upside, okay? And going forward, we had what? Another break of structure again. So this is something that repeats itself in the market. So like I rightly said from the beginning, what you have to do is identify your trading time frame. Very, very important. Then identify the structural highs and lows. Okay. So if there's a change of character, then you look forward a correction back into demand in the case of what? A downtrend. So over here, like I said, price dropped from above here, came down, broke the structure, and left with a very strong bullish candle and end up with changing character at the top here. Then it further move back into the inducement zone where some people are pulling trigger here, and I still say it is wrong. Just a few minutes on, price pushed back into the actual valid demand zone and took off. And after that, there was what? A breakout of structure, and price came back and tested this demand and broke structure again. So this continues on and on. So in summary, what we're looking at is what? Identify your change of character after knowing your time frame that you are dealing with. Okay, then you look for your correction back into demand. Okay, in the case where a downtrend is changing to an uptrend. Okay, so wait for correction back into demand, and probably most of the time the best rates are in the deep retracement level. Okay, 61.8%, 78.6%, and 88.6%. All right, great. Then pull your trigger and wait for price to break structure again. Okay, after price has taken out structure, if the trend wants to continue, you look out forwards and the next demand zone that has been freshly formed before the break of structure end. In this case, this is it, and realize that price just came back, respected that level, and broke structure again. So this cycle continues on and on. Please, I would like us to draw curtain on this simple video, but thoughtful. And till we meet again, please do not forget to share, like, and subscribe, and make the attempt to watch all videos that we have on this channel. All this is coming off for free, and you don't really have to pay anything for having this information. Okay, you don't have to take any course. This is free. You can see it for yourself. So thank you for watching. Peace out. See you next time. Bye.